right, so motor vehicle write-offs. And the question, should your corporation own your vehicle? This means, should your corporation be on the ownership papers? And why does this matter? Well, we recently had a client whose truck was 100% business use, but it got denied by the CRA, because rather than being in the corporation's name, the truck was registered in their personal names. This sucked, and it cost them a lot of extra money in taxes. By the end of this video, I hope you will feel confident making a great decision on whether your vehicle should be owned by your corporation or kept in your personal name. So, should your corporation own your vehicle? And the answer, it depends. If you use your vehicle more than 90% for business purposes, then consider having your vehicle owned by your corporation. But usage on a year-by-year basis does matter. You want to be aiming for at least 90% every year. Now, a quick tip, personal commuting to and from the same location regularly and consistently isn't considered a business trip. You're going to want to check out our other video on whether you should be keeping a mileage logbook and for how to track your kilometers. On more information for that, be sure to check out our other video. So if you're driving less than 90% of the time for business purposes, then it's best to keep your vehicle in your personal name. When a vehicle is used more than 10% of the time for personal driving and it's owned by a corporation, the negative tax consequences can arise. This is called a standby charge and can add big bucks to your personal tax bill. In fact, some of our clients have paid thousands of extra dollars because they're very expensive vehicles were only used marginally for business use but were registered to their corporation. This meant they paid significantly more taxes than they had to, and no one wants that. So if there's a risk that you might have to pay more taxes, then why should you consider having your vehicle owned by your corporation? Because writing off expenses like gas, repairs, and insurance usually means a higher write-off than just claiming mileage. But deducting expenses is only available if your corporation owns the vehicle. So if you're considering transferring your vehicle into your corporation, GST, PST, and other taxes can arise. To ensure you'll benefit in the long run, keep that 90% rule in mind before making a change. So if you're purchasing a business or incorporating a sole proprietorship, consider using GST form GST 44 to avoid the GST. Now, if you live in British Columbia, Canada, an exception to the PST on vehicle transfers is available. You're going to want to check out PST Bulletin 210 for more details. So to summarize, if you use your vehicle more than 90% of the time for business purposes, consider having the vehicle owned by the corporation. All right, I hope this video has helped you make a great decision about whether your vehicle should be owned by your corporation or kept in your personal name. That's all I have for today on vehicle ownership. Bye for now.